We'll just wait for 2-3 minutes and then we will start.
Yeah, we are live in YouTube as well.
Good evening, everyone. We will be starting this event within few minutes, 1 minute. Let the members join. Let's give 1 minute for them to join, please. Good evening, everyone. Speakers of today's evening, past chairman, sponsors representatives, invitees, guests, professional colleagues, committee members at ICA Abu Dhabi chapter. Ladies and gentlemen, good evening. It gives me great pleasure to welcome you all to today's webinar on economic substance regulation in UAE. It's popularly known as ESR. There are few amendments to economic substance regulations. It is important for business owners, consultants, and finance professionals to understand the latest changes and their impact. Today, we have CA Hanumanta Kumar, founder and managing director, MCA Management Consultants. Welcome, CA Hanumant. We also have Mr. Binit Shah, partner at Crow. We also welcome Mr. Binit. Our moderator for today's event is CA Mohammed Shafiq. He is the managing partner of MS Accounting and Tax Consultancy, and he is also our committee member. Welcome, CA Mohammed Shafiq. We have successfully completed the certification course on stock market technical analysis in association with NSE Academy. The certification course was a great success. Response from members were amazing. We will be launching similar courses, including features and options, soon. We have recently conducted webinar for CS students regarding how to crack final exam. And we had a very good participation from CS students. As you all aware that the 32nd annual international seminar of our chapter will be held on 19th November Thursday, 20th November Friday, and 21st November Saturday. This year, we have renowned personalities who have agreed to speak during the annual seminar. The details of speakers will be circulated within few days. I wish a great learning from today's session. We request you to maintain social distancing, wear mask whenever you go out of your home. Please follow the guidelines of government. Please stay safe and healthy. Now I request CA Shafiq to introduce the speakers.
Thanks, John. Good evening to all. I'm Shafiq Nilail, committee member of ICA Abu Dhabi chapter. It's my privilege and pleasure to welcome today's speakers and moderator. So the first speaker I'm going to introduce today is CA Hanumant Kumar, the founder and managing director, MCA Management Consultants. CA Hanumant Kumar has more than 2 decades of professional experience, and out of which 20+ years in Dubai. He is well known for his business connection and industry networking in GCC, India, and Africa. He has worked in several reputed organizations in various positions between 1994 to 2009, before co-founding MCA Management Consultants in 2009. CA Hanumant Kumar is the past chairman of ICAI Dubai chapter. He has served in all positions in Dubai chapter of ICAI for 8 consecutive years, and he was the youngest chairman of Dubai chapter in the history. He was a member of the International Affairs Committee in 2017-18, formed by ICAI New Delhi, and contributed on various international matters relating to CA profession. He has addressed on several technical topics on VAT, excise, AML, BEPS, ESR, CBCR, and transfer pricing to various professional and business forums. His areas of expertise include audit and consulting, taxation, forensic audit, transaction advisory, fixed asset management, business strategy, mergers and acquisition, and international taxation. So moving to the next speaker, the second speaker of today is Binit Shah, partner, tax and technology, Cromac Consulting. Binit has 30 years of professional experience of serving clients across multiple industries. His wide experience on VAT, ESR, transfer pricing, outsourcing, and technology help his clients to achieve excellence in their organization. With background of technology, he is able to adopt and implement various systems for his clients. Extensive experience of operation and implementation of new regulation in various industries has helped him gain knowledge and convert into deliverables. He is managing highly qualified team to deliver client expectation in a proper manner. Binit holds Bachelor of Science from Gujarat University. Last but not the least, who is the moderator? Aaron Shafiq, Mohammed Shafiq, the most active and vibrant committee member, the man behind all these PDC activities. So Mohammed Shafiq is the managing partner and CEO of MS Accounting and Tax Consultancy. He is also a committee member. I already mentioned that earlier. Shafiq is a chartered accountant from India. He holds advanced diploma in management accounting from SEMA, UK. He is a certified Islamic finance executive and holds UAE VAT compliance diploma from the Association of Tax Technicians. He has received His Highness Sheikh Zayed bin Sultan Al Nahyan Memorial Award for the academic excellence in the Gulf region. Shafiq was recognized as the recommended expert advisor in the region by Global Advisory Expert. His firm, MS Accounting and Tax Consultants, has been recognized as Tax and Accounting Consultancy Firm of the Year in the UAE for 2020 by the Global Advisory Award. This is a great achievement for a firm of this size. So with this brief introduction, I hand over the proceeding to Hanumanji.
Thank you, Shafiq. It's a great honor again to address Abu Dhabi chapter of Institute of Chartered Accountants of India. It's always been a great pleasure in sharing the knowledge, especially a topic that is very relevant in the current times. And there has been a significant changes happened to the regulations issued by the Minister of Finance earlier in August, but it came to public notice on 1st of September. So what had happened was completely the earlier regulations were repealed, both in terms of regulations as well as guidances were repealed, and a new set of regulations and guidance were issued. And in addition to that, whatever notifications were filed already have been asked to refile it again once a portal is ready. So today, this session on ESR will be covered by me and my fellow speaker, Mr. Binish Shah. So I'll be addressing on all the amendments that have come in the new regulations vis-a-vis the old regulations, and what significant changes and what will be the implications that I'll be addressing. And Binit will be addressing mainly focusing on uh, what are the tests that requires to be complied for you for a licensee to qualify the economic substance test, okay, in terms of whether it is a SIGA or it is managed and directed, or in terms of adequacy, that I'll he will go through in detail, which now I will put a presentation and I'll run through the significant changes that have taken place, and we will take the Q&A at the end of the session. Uh, can I share the screen? I have the permission to share. Yes. Yeah. So hope the screen is visible to everyone. So let me give an update on what the regulations ESR have taken place in UAE now. So, as many of you are aware that ESR was introduced on 30th April 2019, and its effective date is for the financial years commencing from 1st January 2019 onwards. So, as I was mentioning in my brief, so there is a Cabinet Minister Resolution 57 has been issued on 10th August 2020, which repealed the earlier provisions issued by the Cabinet Minister Resolution 31 of 2019. Similarly, on 19th August, a Ministerial Decision 100 of 2020 repealed the earlier guidance issued by the Ministerial Decision 216 of 2019. So, in this entire key amendments, I'll be, taking it up in three sections. One is what are the changes in the definitions? What are the changes, amendment in relevant activities? What changes have come in terms of governance, disclosure, and penalties? So if you look at all the red above is all the regulations or in terms of your guidance notes, FAQs. So most of them, not many, all of them have been repealed, and they've come out with a new regulations on 10th August 2020 and 19th August 2020, the guidance note. And Minister of Finance also updated their revised frequently asked questions in their website. I request everyone to go through the Minister of Finance website, because it has clarified most of the doubts that they had, or most of the ambiguities that were there in the earlier provisions. So the key highlights are, there are a couple of definitions have changed, including the definitions of licensee as well as exempted employees. Earlier notifications were not filed by government entities which are, owning 51% and above, both federal and local. They are no longer exempt. We'll come to that in the subsequent sessions. Then there are important definitions have been amended, mainly on connected person, foreign connected person, and relevant income. These are very, very important definition, because these are referred in the relevant activities. So these are very, very important. And they also given new definitions for what is group, what is M&E group, what is consolidated financial statements. Then they have given clarifications on branches, both UAE companies branch operating outside, or foreign company branch operating in UAE, all those. Then there are certain changes in relevant activities, and they've introduced a new regulatory called National Assessing Authority, which is your Federal Tax Authority, FTA, and the role of regulatory authorities as well as the role of FTA have been defined. So FTA will have now more and more powers compared to regulatory authorities, which will do more of an administrative role in terms of collection of notification, collection of reports, and passing on to Federal Tax Authority, which who does the assessment. Then a new portal is will be expected to file notifications and reports. So whatever previously notifications are filed with regulatory authorities, they said that it has to be refiled. I know it's a little bit of a pain, but it is good. One time this exercise has to be done. But what had happened, since each regulatory had their own format, although more or less everybody followed the the template guided by the Ministry of Finance. There were some challenges for local companies. For example, Ministry of Economy website, that particular notification written had certain limitations. Whereas the same activities conducted in free zones, they were freely able to report, whereas in the Ministry of Economy, those activities were not there. So now I think for all across free zones, across offshores, or across mainland companies, there'll be one format, will be with the Ministry of Finance or in the FTA. I think most likely it will be with FTA, and then everyone has to file over there. And there are no changes to the test of economic substance regulations. That remains as it is. So now in the subsequent slides, let's go through in detail about the changes. So section 1 will be covering on amendments in the definition. First, applicability of this regulation. It's applicable to licensee. The old definition was a licensee is a natural or juridical person licensed to carry out relevant activity. That has been removed. Now, I think more clarity is there. What they said is either a juridical person incorporated inside or an outside state, an unincorporated partnership, limited or a general partnership registered in the UAE, and that carries on a relevant activity. This is very important because earlier, whether offshores or branches of a foreign companies, okay, whether they are subject to these regulations or not, there was some kind of an ambiguity was there. Now it is very clear, if it is a juridical person incorporated inside or outside state, if they are registered in the state, they and carries on a relevant activity, they have to they'll come under the subject to these particular regulations. And in the Minister of Finance FAQs, they said that a natural person, a sole proprietorship, a trust, and foundations are not considered as licenses. So the amendment has been brought, mainly on the grounds of having separate legal status, separate from ownership, legal status separate from ownership, and to specifically include, entities registered outside UAE, like, because branch is only an extension of a parent company or head office. So obviously, they will not have the certificate of incorporation, or whether it is RAC ICC or Ajman offshore or Jabalali offshore. Technically they are not within the state. So now if they do an relevant activity within the state, so they'll also will come under this particular category. Now they brought the old definition was where an entity which is a government entity directly or indirectly owned 51% above of the share capital, they were exempted. Now that has been completely removed. They brought down 5 categories. First category is under the exempted licensee, a licensee that is an investment fund. Second is a licensee that is a tax resident in a jurisdiction outside other than UAE. Then third is a licensee that is wholly owned by one or more residents in UAE and meets the following 2 conditions. They said that it is not part of a M&A group. We will look into what is M&A group, and it carries out a business entirely in UAE. And the fourth category is a licensee that is a branch of a foreign entity, and the relevant income of the such branch entity is subject to tax in a jurisdiction outside UAE. And fifth, normally every regulator will keep this. Any other licensee as determined pursuant to a decision of the Minister of Finance. So what they also said is these exempted licensees must submit to the relevant regulatory authority along with the notification sufficient evidence actually, substantiating its status as an exempted licensee for each financial year in which it claims to be an exempted licensee. In case you are not going to substantiate, okay, then you will have to meet the entire regulations will be applicable. Then you may have to also file the report in case if you are carrying on a relevant activity and earning some income. So proving that you are an exempted is very, very important. So that substantiating the evidence makes you, to avail this exemption. Otherwise, this exemption will not be there. Now let us look into all these four categories, four categories, which are all, exempted. First is investment fund. What they said is the fund, investment fund itself, or any intermediate entity, or a holding company, intermediate holding company, or a special purpose vehicle used to, it is used to facilitate such investment. Okay, even those are covered actually. For example, you have an ADGM company, and such ADGM company has multiple SPVs, and those SPVs are investing into ultimate portfolio company. Even those SPVs will be subject to this exemption. Okay, and the portfolio company, that is the end company where the funds are deployed, they will not be availing that exemption. If you see the unless a fund itself is self-managed fund, then it is different. So if you look at the chart, investment fund, both fund and SPVs are exempt, and if you look at the end portfolio company, they are not exempt. And second one is a licensee that is a tax resident in a jurisdiction other than UAE. So there can be two scenarios. An entity is not required to meet the ES test if such entity is a tax resident in a jurisdiction outside UAE, or an UAE entity carries on a relevant activity through a branch registered outside UAE. You have a UAE entity and it has a branch in say France or UK or anywhere. The entity is not required to consolidate that activities for the purpose of economic substance regulation if such branch income is completely taxed for corporate tax in that country, and that particular branch is a tax resident in a jurisdiction outside UAE. Okay, such branch also includes permanent establishment or any other form of taxable presence for tax purposes. If you look at the right side, there's a UAE free zone company. It is being managed and controlled, say in Ireland or UK, and this income is completely taxed in the hands in Ireland as good as an Ireland company. Then such company, UAE free zone company, will not be subject to economic substance regulations, and you need to substantiate the evidence that you have paid the tax or you are subject to assessment and all these things to along with the notifications. Just keep in mind, just because such branch or an outside entity, just by that may be paying some withholding tax, that alone will not bring you to be the tax resident outside. It has to be the entire income has to be taxed over there, not just based on the withholding tax. This is a very interesting category that they brought under the exempted. What they said is an entity wholly owned by UAE residents. Okay, so to avail this exemption, the entity is ultimately wholly and beneficially owned directly or indirectly by UAE residents, and it is not part of an M&E group. What is M&E group is any group that includes two or more entities, the tax residents of which are in different jurisdictions, or it's like a PE. You may be a resident for tax purposes in a jurisdiction which is different from where you are carrying on the activity. In those two cases, you come under the definition of M&E group, and all activities are taken place in UAE, and the resident owners, I mean, the owners of such entity are residing and residents in the UAE. So the entity must therefore not engage in any form of business outside UAE to avoid this exemption. I mean, my view is every company will be doing imports and exports, and all these things are fine. My view is only that the relevant activity, what they meant is the relevant activity. The entire relevant activity have taken place within UAE, not all other activities, because that way, most of them they import and then sell it here. So only what they meant is the relevant activity. Again, what they have defined, what is UAE residents, means UAE citizens and also individuals holding a valid UAE residence permit who reside in the UAE. And if you look at some examples, for example, company A and B are the group entities, all are resident in UAE. Okay, company A is doing some relevant activity with company B, then both the companies are exempt if it happens within the UAE. Another one we will see, company A, B and C, okay, all are group entities, whereas company A and company B are resident in UAE. They conduct relevant activities. Company A conducts relevant activity with B, and company B conducts relevant activity with C, which is in Oman. In this case, they are not considered to be an UAE entities, because Oman entity is subject to corporate income tax in Oman. So what will happen is they will come in the definition of M&E group. So they are not, so it is not part of the M&E group. So obviously, so this exemption will not be availed by such entities. And fourth category is assume that you have a branch of an Indian entity. Okay, so an Indian entity having a branch in Dubai. So such Dubai operations profits are getting taxed in India. Then such Dubai entity will be subject to exemption, for which to claim an exemption, you will have to give us evidence along with the notification. Such evidence could be a letter or certificate issued by the competent authority of foreign jurisdiction in which the entity claims to be a tax resident, stating that the entity is considered to be a resident for corporate income tax purpose in that jurisdiction, or an assessment or a corporate income tax on the entity, or a corporate income tax demand, evidence of payment of corporate income tax, or any other amount issued by the competent authority of foreign jurisdiction in which the entity claims to be a tax resident. So such evidence is very important to avail this exemption. So if you look at one example, on the left side, parent companies in India, and India has got a branch in a mainland entity, or free zone entity in UAE. And for this UAE and the free zone branch, ESR is exempted till the time they are able to substantiate evidences. On the other hand, look at another example, parent companies in Bahrain, and it has a branch in one of the free zones in UAE. They are not exempt because in Bahrain there are no corporate income tax. Obviously, if that is not getting taxed there, so this particular free zone entity will be subject to ESR. So they cannot avail that particular exemption. So in summary, who are subject to the regulations, all the onshore companies, free zone, UAE offshore, branch of foreign entities, unless it satisfies the conditions of exemption. Okay, who are exempt? Investment fund, entities that are tax residents outside UAE, entities wholly owned by the UAE residents, and all activities are carried out in UAE, branches of a foreign entity whose income are subject to tax outside UAE. Again, they mentioned licensee, the following persons are not considered to be a licensee. Who are all they? A natural person, a sole proprietor, a trust, and a foundation. The old one now provision is no longer valid, so I'm not taking into that. So They have given a very, very important definition on connected person and foreign connected person. There has been a change, significant change, because this is very, very relevant for distribution service center business or headquarter business, and shipping business, high risk IP. All these areas, these definitions become very, very important. So the old definition of connected person is a natural or juridical person who is related to one or more natural or juridical persons through direct or indirect ownership or control or common control. Now this has been simplified. They said an entity that is part of the same group as the licensee or an exempted licensee. Again, you'll have to look into what is the definition of the group again. Okay. Group, they mentioned, they said that two or more entities related through ownership or control such that they are required to prepare a consolidated financial statements for financial reporting purpose under the applicable accounting standards. I've just mentioned IFRS, not necessarily it has to be IFRS. It is whatever is the applicable accounting standards. In this region, we predominantly adopt IFRS, so that's why I've just put that. So what they said is either through ownership or control, and whereby they are required to prepare consolidated financial statements. If they are not required to prepare a consolidated statements, financial statements, that will not be regarded as a group, then that will not be regarded as a connected person also. Earlier, the issue is, even if you are buying goods from a company where you have even 1% shareholding, okay, even then that transaction was coming under the purview of ESR. Whereas now, if they are not, see, by holding 1%, most unlikely that you will have a control, so in that case, you are not required to prepare a consolidated financial statements for reporting purpose. So then in that transaction will be as good as you are dealing with a third party only. So they are not connected person. So this is a very important definition. Again, IFRS 10 covers about the consolidation, where it says parent entity to present consolidated financial statements. A parent entity is that controls one or more entities. Okay, we will look at the control definition as per IFRS 10 in this next slide. So a parent company is that controls one or more entities. They are required to prepare the consolidated financial statements. Again, in this regulation, they also talked about defined what is consolidated financial statements. The financial statements of a group in which assets, liabilities, income, expenses, and cash flows of the ultimate parent company are presented as those of a single economic activity. And foreign connected person, the previous definition, again, they were repealed, and with the new definition, simple definition, a connected person that is not a tax resident in UAE. So any connected person, okay, again, you'll have to see what is connected person, whether you fall under the group where, you are required to prepare a consolidated financial statement. Whoever is outside UAE and a tax resident outside UAE, they're all come under as foreign connected person. So old definition no more relevant, because they've used a connected person that is not a tax resident or deemed as resident in the UAE. In fact, in many occasions, we were looking out what is a deemed resident actually. We never found an answer to that. Good that they removed this, definition which didn't have any, answer to that. So IFRS 10, the control, I don't have to go through in detail. All chartered accountants may be aware. So you may be, doing when you have power to vote and, power to control decisions, and or you have an exposure or rights to variable returns, where, you get variable returns or you control the returns, or you have a combination of both power and returns, where you influence the policies, make important capital decisions, you appoint people, key people, you control the underlying investments. In these cases, you fall under the control definition, then whereby you will be required to, where you are required to prepare a consolidated financial statement. Now, many times it happens that the accounting standards may be requiring you to prepare a consolidated financial statements, but you may not be preparing. But even then, you will fall under the definition of connected person, whether you prepare or you don't prepare. If you are required to prepare by your accounting standards, then you fall under the definition of connected person. So let us look at with another example. Suppose a parent company is in UAE. It provides services to a subsidiary in Saudi Arabia. Okay. So and by virtue of a subsidiary, parent company and a subsidiary is getting consolidated with parent company. So now that services is considered as a service center business, because in service distribution service center business, if you render any services to a foreign connected person, that will come under the ESR definition. So in this first example, you will be coming under the connected person definition. Assume that a parent company UAE and it has an investment in KSA, and to that company you are also providing, your parent company is providing some services to investment company KSA. Here you are not required to consolidate. So obviously, even though you provide services, okay, this will not be treated as a service center nor a group entity, because you are not required to consolidate. So it will not come under the definition of foreign connected person. So this is a difference that these definition brought a light to us. So another important definition what it came is earlier along with the notification, we were asked to provide, the licensees asked to provide information on the parent company, ultimate parent company, or ultimate beneficial shareholders only when you are carrying on a high risk IP activity. Now in the guidance note, they said that whether you carry on any relevant activity, along with the notification, you provide all these three details. So many companies are very sensitive to give UBOs. Okay, now you are required to provide UBOs, parent company details, and ultimate parent company details. Of course, they also defined what is parent company, ultimate parent company. This is there is no significant change in the definition. What you everybody understand the same thing. So the only the change that has been that has come is, along with the notification, you will have to provide all the sensitive information to the in the along with the notification, that in the form you will have to provide these informations. Now let us look into some key changes that has come in relevant activities. You just to recap, there are 9 relevant activities: banking, insurance, investment fund management business, lease finance business, headquarter business, shipping business, holding company business, intellectual property business, and distribution service center business. Again, you all may be aware, it doesn't matter, there's no threshold involved in this. Even if you receive a passive income, even if it is 100,000 dirhams, 10,000 dirhams, if you earn any gross income out of these relevant activities, that will be you will be subject to economic substance regulations. Okay, and also remember that not all business activities are relevant activities. Relevant activities are clearly defined, only 9 of these. If you look at the changes in the relevant activities, the significant amendments have come in distribution service center business, lease finance business, holding company business, and IP business. Headquarters, shipping business, banking, insurance, investment fund management, there are no significant amendments to that. So the main one, which covers 80% of the UAE, which is a distribution service center business. What are the amendments that has come? Earlier the definition, they said that purchasing from a foreign connected person and importing and storing in UAE. Okay, that created a lot of confusion earlier. And then component parts or materials for goods or goods ready for sale, and reselling such component parts, materials, or goods outside UAE, they mentioned. So that was a debate, because that was not there in the BEPS action point 5. Even last time when I addressed also, I've recommended to take whether inside or outside within the purview, because This whole gamut of ESR has come only as result of BEP Action Point 5, which talks about harmful tax practices. If you are buying from a related party, sell within UAE also, you can still park your profits here. So now with the change, they removed outside UAE, they removed importing and storing in UAE. So any third port shipments or whether you sell within UAE or outside UAE are coming under the purview of this amended provision. And in the services, they said providing services to foreign connected person. They removed, in connection with the business outside UAE. Okay. Because they were some interpreted saying that if the business happens outside and not within UAE, they took the decision that ESR is not applicable. I think now place of supply, it is not relevant now. If you are providing services to foreign connected person, that is covered into that. So the third port shipments is covered, and selling within UAE also covered. Uh, so again, this earlier that foreign connected person, that definition is clarified now. So not necessary that whatever you buy from a related entity, foreign related entity, everything requires to be coming under the purview of ESR. Only if they are required to consolidate as per the definition of connected person. Okay, only then you will be coming under. So most of the small transactions are small where you don't have a control or a ownership in a big way, then all those transactions, basically the purpose is you cannot influence the price there actually, because you are only a minority. So you will be supplied at arm's length pricing. Only where you are consolidating or where you are controlling, then you can influence the price and you can shift the profits. That was the concept behind that. I think this provision is a very very good provision, so that not that everybody will come under the purview of economic substance regulations. And lease finance business, they have clarified. They included saying that lease finance business encompasses licenses that offer credit or financing for any kind of a consideration, and including financing to connected person bracket they put intergroup financing. So they brought the connected persons. Again, connected persons, go back to the definition, check whether you are supposed to required to do the consolidation. Only then this will come. Okay. They also uh, uh, brought down this cash pool arrangements. Most of these big companies have got cash pool arrangements. They said that whatever income that you earn out of this cash pool arrangement, that will be regarded as a finance, so because you earn interest out of that, so that will also come under the lease finance business. They removed one particular paragraph: when there is no expectation of consideration from the credit at the time it is provided, the UAE business will not be considered as carrying on the lease finance business. So by removing this, now what would be covered under the scope is only if there is only any kind of a consideration is received or involved, only then it will come under the lease finance business. So lease finance business, I will cover two slides, very important, because this has been big debate was there at the time when the notifications were filed. So lease finance business are governed by two regulations: Federal Law number 8 of 2018 on the leases. Then there is a Decretal Federal Law 14 of 2018, which is on the finances. If you look at Federal Law 8 of 2018, the law mandates UAE Central Bank to regulate the lease financing activity, and accordingly, the central bank shall issue its regulations or circulars to license finance lease activities in UAE. Okay, now we'll see what is the stage of these regulations in the subsequent slide. The second one is the Decretal Federal Law number 14 of 2018. This law highlights the activities that shall be considered as finance activities and are subject to central bank licensing and supervision. Mainly, it includes, if you look at clause article 65 of that regulation, providing all credit facilities all types, providing funding facilities of all types, including Sharia compliant funding facilities. It is not necessary, it's only meant for banks, it is meant for everyone, even limited liability companies or unlimited partnerships and all these people. If you provide these things, then you are subject to central bank licensing and supervision. The lease Federal Law number 8 of 2018. One good thing is the central bank is yet to come with the regulations. Okay, to best of my knowledge, I'm not sure if the regulations have come, but to best of my knowledge, I did my research. It has not come. So they are supposed to issue the regulations for the issuance of license to lessors and practicing finance lease business in the state, including license to foreign finance lease companies branches also. So far they have not come out with the regulations. Um, as of now, even if you do an activity, you will come under ESR regulations. But as such, what is applicable to them, because they are supposed to be governed by these regulations, but that regulations are yet to be yet to come actually. Then another one they said is a register shall be created to register the contracts, basically release register, to be executed on the immovable property, which should be regulated under a decision to be issued by the cabinet upon ministerial recommendations, provided that the decision should include the body that will manage it and the details to be included, as well as the fees for that registration. Even this ministerial decision is has not yet come. So both so as far as finance lease business is concerned, even if you do, you comply with the ESR, but only when you get these regulations, probably you'll have to look into what additional things that you need to comply as far as finance leases are concerned, because you have a lot of lease business here, equipment leases, in the construction industry, you have a lot of machinery is getting leased. So all those people will have to look into, especially aircraft leasing. Only that they said is real estate doesn't come under this purview. In the FAQ they said, I mean guidance note they said, whereas private immovable properties like aircraft leasing, ship leasing, those things will come. So all movable and immovable like machinery and your all kind of a finance leases will come under this particular regulation. And the other one is Decretal Law 14 of 2018, where they said is who are licensed financial institutions. They've said that banks and other financial institutions licensed in accordance with the provisions of the Decretal Law to carry on a licensed financial activity, okay, or more, including those which carry on whole or part of their business in compliance with the provisions of Islamic Sharia and are either incorporated inside the state or in other jurisdictions, or have branches, subsidiaries, or representative offices in the state. So if you look at other financial institution, all other companies other than the banks will come under that definition. Even all the private companies and the joint stock companies, everybody will fall under the definition. So what they said in Article 65 is, okay, the following activities shall be considered as financial activities subject to central bank licensing and supervision in accordance with the provisions of the law, which are carried out by licensed financial activity institutions, which includes banks and other financial institutions. So you're talking about providing credit facilities of all types, providing funding facilities of all types, including Sharia compliant funding facilities. This particular portion is still is not clear, because I don't know whether any company has approached central bank for this license. So if you are doing a funding activity for an interest, for a consideration, all the free zone entities filed saying that they have ticked yes, they are into lease finance activity, whereas this option was not there in mainland companies, where the regulatory authority was Ministry of Economy, because in their notification format, only wherever they were supervising only came. So since this was coming under the central bank regulatory authority, this particular thing was not there. Even now we don't know what will happen, but at least there is one uniform format is coming in FTA website or Minister of Finance website. In that, they will give all the 9 relevant activities. At least if a local company has lent money to one of its connected person, you can at least tick saying that yes, I have lent for my joint venture company or my subsidiary company for a particular interest, so I come under this particular ESR definition. At least you will comply on the ESR front by reporting, but we still don't know what will happen to doing such activities without licensing from the central bank to do these things. That is still I don't know whether anyone has applied and got permitted or rejected. I am not able to comment on that part. At least in the new notification, you will be at least allowed to report that you have done a finance lease transaction. Then we will see the consequences also. Holding company, what they did was they removed in the definition. Earlier in the definition, they said holding company is a holding company. A licensee is a holding company in accordance with the law applicable to the licensee carrying out such activity. And when you looked at most of this jurisdiction, one was issuing one nomenclature. One place holding company was there. One place investment of into commercial enterprises. One place investment of your own funds. I think they removed that particular one. Again, you will be looking at substance over form. What they said is, if your sole function is acquiring and holding the shares or equitable interest, you fall under the definition of holding company. And another one is you only earn dividends and capital gains. If you satisfy with these two, you fall under the definition of holding company. And you all may be aware, if you fall under the definition of a holding company, you don't have an enhanced compliances. You have a reduced compliance, whereby you just comply with the requirements of the licensee who gives the license to you, plus you have an adequate employees and premises for holding and managing the holding company business. In holding company business, there's an exemption. You don't need to be managed and directed within UAE, and you also don't need to demonstrate adequate expenditure. These two are removed. I mean, these two were earlier also were not there. Only there was change only in the definition. So if you are carrying on any other activity, or you are investing into any interest bearing instruments, okay, then you will lose the status of holding company. Then you will be subject to full economic substance requirements, and the reduced substance requirements you will not enjoy. They also given one clarification in the amended guide, saying that as a holding company, we said that only you have to do holding of shares and equitable interest, and you should only receive dividends and capital gains. Suppose if you have own an office, okay, own a property to conduct your holding company business, they said that it is fine, okay, because anyway you have to comply with you have to have adequate employees and premises for holding the and managing the holding company business. So if you are managing from your own building, and which is shown in the asset side of your holding company balance sheet, they said it is fine. IP, there was no big change in the normal IP. So you know what is IP? Copyrights, patents, trademarks, brands, whereby you receive certain income. So if such income is separately identifiable, okay, then only it becomes an IP asset. Okay, many of you may be having in your balance sheets trademarks, copyrights, patents, okay, which is supplementary to your main business. Then there is no issue. Only thing, if you are earning any separately identifiable income out of such trademark IP, then only you will be falling under the IP, intellectual property business. Otherwise, there is no issue. Only there was a change in the high risk IP definition. Earlier regulation, they said that in the definition, what is high risk IP? First one was a licensee that owns a patent or a marketing intangible or similar asset was considered as carrying on high risk IP. If it was not carrying out research and development or branding, marketing and distribution as part of its core income generating activity. Now, this has been removed in the new regulations. They said it is no longer a high risk IP, provided in what they said is, okay, you don't need to do this research and development or a branding or a marketing and distribution part of your SIGA. But if you will be meeting the SIGA if you consider if you do any of these following activities: taking strategic decisions and managing the principal risk relating to development and subsequent exploitation of IP asset, acquisition by third parties, and subsequent exploitation and protection of the IP asset. Second one is carrying on ancillary trading activities through which IP assets are exploited, leading to the generation of revenue from third parties. If you do this, then also you will be doing the SIGA, so it is not considered as a high risk IP. That was a significant change. And you know what is high risk IP? Okay, you are not created the IP. Okay, you have obtained the IP from a connected person or through a donation or to R&D or somebody from outside, and then you are licensing to one or more connected persons, and you are earning from such foreign connected persons, okay, without doing anything in UAE. So then they come under high risk IP. Now, what they said is, earlier the definition, they said only licensees the IP asset. Now, not only licensees, even if you sell also, that will come under the high risk IP. And you have to also earn separately identifiable income. That also has been added. So you know the consequences of high risk IP. Uh, your information will be automatically passed on to the foreign competent authority. In addition to that, in UAE, you will be subject to increased substance requirements, where you will have to meet with the dumpy functions, as well as you need to, they will be looking too much detail into the employee information to see whether you have relevant employees to manage your IP, and they will look at your business plans to show reasons for holding the intellectual property in UAE, and they will see that whether decision making is happening in UAE. So relevant activities involving cross-border transactions. So mandatory foreign related parties, only 3 cases: headquarter business, distribution service center business, high risk IP business. This is where the definition of connected and foreign connected person will make a significant change. Shipping business, there's no much change, because you will fall under shipping business only if you operate in international waters. Excuse me. Others are banking, insurance, investment fund management business. These are highly regulated. Holding company business, substance are very reduced. And IP, other than the high risk IP, then you have lease financing activities, where you are currently regulating, which is all your non-banking finance corporations, like Finance House, Dunia, all these companies. Currently, which are not regulated is other leases, okay, like real estate, private mobile properties, leases other than all other leases. Then funding to related and unrelated parties. These are not currently regulated, although these two regulations, what I talked about, Federal Law 8 and 14 of 2018, they will be regulating once the regulations are announced. So let us look at the test now. It's they made it very simple now. First, we'll have to see whether is the licensee a corporate body or a partnership in the UAE. Okay. If no, economic substance regulations do not apply. If yes, then the next thing we'll have to check is a licensee conduct relevant activity in UAE. If it is no, okay, then yes, regulations are not applicable. Okay, you don't need to even file notifications unless such regulatory authority, okay, may ask you to demonstrate actually. Okay, so then they may ask you, okay, you file it, then you have to file it. So at least with this earlier definition, everybody was included, whether it's a grocery shop, saloons, supermarkets, everybody was included. Now, all these businesses which are doing mainly within UAE, not conducting relevant activity, they don't need to even file also, whether it is, grocery shops, saloons, supermarkets, laundry, restaurants, and all these things. Then the next thing is the licensee is an exempted one. If they're exempted, then you don't need to go through the test, but you need to file the notification along with the supporting evidence to substantiate the exemption status. If it is not an exempted company, then they will see whether you have earned any income from the relevant activity. If you are not earned income from a relevant activity, then notification level you will stop. Test will not be applicable. If you earn, then you will go to the next step of filing the economic substance report also. So quickly now another 5-6 slides are there. I'll run through what are the changes in the governance, disclosure, and penalties. So as I mentioned, now new regulator has come, which is National Assessing Authority. So by introducing this, they will be doing the important functions of assessments, all the assessments to determine whether the licensee has met the test or not, and they can impose administrative penalties, and they can hear and decide on the appeals. They can exchange information to the competent authority, which is the Minister of Finance, and they can carry out any other functions to implement these regulations. With the administrative setup in place with regard to tax law governance, okay, with that powers, Minister of Finance appointed FTA as a National Assessing Authority. Now, if you look at this one, this chart, so a licensee or an exempted licensee files the ESR notification. Okay, it moves to the report. It moves to the regulatory authority. Basically, regulatory authority collects and reviews the accuracy of the notifications and reports. More of an administrative function. Okay, what they do is once they go through, regulatory authority reports to FTA. Okay, in case the licensee fails to submit any requested information, okay, they cannot do much. Once they'll have to go to FTA. FTA does the assessments, okay, and notifies competent authority, which is Minister of Finance, whether they pass the test, fail the test, and they will have to intimate all high risk IP licenses, and they'll also have to intimate this entity is a tax resident outside UAE, and this entity is a branch of a foreign entity which is subject to tax outside UAE. Then comes to Minister of Finance, which is a competent authority. They will do the function of exchanging of information for the foreign competent authority, where parent company, ultimate parent company, or ultimate beneficiary owner resides. So what all they can exchange? So if a licensee fails the test, they'll exchange the information. Where a license is high risk IP, automatically they'll exchange information. And when an entity claims to be a tax residence in a jurisdiction outside UAE, it is not just where you are declaring in the exemption notification. They will also share this information to that jurisdiction also. Similarly, if a branch of a foreign entity claims to be a tax resident in a jurisdiction outside UAE, competent authority will share with that jurisdiction competent authority. So another change that has come is they have defined what is relevant income. Okay, they said that it means all gross incomes. Okay, recorded in the books under applicable accounting standards. Okay, whether or not, irrespective whether or not a company derives a profit or loss. Again, they defined what is gross income. They said that it includes everything, all the revenues, sale of inventory, properties, services, royalties, interest, premiums, without deducting any type of a cost or expenses. So what they meant is a gross sales. In terms of services also, they said gross revenue, don't deduct any cost of goods sold or don't deduct any cost of services. So the ESR compliance. So now once the portal is ready, you'll have to refile it. And one more clarification they have given is notification has to be filed within 6 months after the end of financial year. So now if it is March, you'll have to file by September. If it is year end is June, you'll have to file by December. And as far as the report is concerned, you'll have to file within 12 months from the end of financial year. So modification in the in the report, what they said in the notification, as I mentioned, you'll have to provide the information on parent company, ultimate beneficiary shareholders. And they've also included one new very important one is in the ESR report, you'll have to include now financial statements. This was not there earlier. So in the report, you'll have to include financial statements. They have not mentioned whether it's audited or unaudited, but I think to have a good governance, better to provide audited financial statements. So they also clarified entities under liquidation. Till you complete the liquidation, you'll have to file the ESR notification also. I think I'll skip this for want of time. Branches is something which I will tell you because there was little confusion. So if your parent company and your branches are all in the mainland, for example, in this example, parent company is in Abu Dhabi. You have main branch in Dubai, another branch in Ras Al Khaimah. If you file a single notification by the parent company, that is good enough. Each branch need not file. Now, suppose another example, you have a parent company in Abu Dhabi, mainland branch in Dubai, another branch is in a free zone. Okay, this is where tricky will come because for the mainland, regulatory authority is going to be Ministry of Economy, whereas free zone now Jebel Ali. So Jebel Ali will become a regulatory authority. So in everywhere they said that parent and branch. So parent is a single notification. I hope when they provide in the FTA, they will. In this case also one single notification would do, but how the regulatory authority will have a control over that, we'll have to see what the new notification format brings. The columns we'll have to see. Probably if Jebel Ali also gets an information, they will be in a position to follow up for any administrative reasons. So 12 months you'll have to file. I'll skip this. In the written, as I mentioned, you financial statements is something which is added. Rest all the same. Other key administration is you'll have to maintain records for 6 years. And there is a specific provision given to all the government authorities also. All the government authorities, ministries have to cooperate with, in sharing the information on clients relating to the ESR, if at all required. So that doesn't involve any sharing of a confidential information. So this particular clause has been added. Penalties, earlier penalties were lower. I think the penalties are also increased, starting from 20,000 to 400,000. Earlier it was 10,000 to 300,000. I mean, I'll circulate this presentation. You can go through this. And this is from my side. Now I'll leave to Beneath to do the rest of the presentation on the test.
Hi, good evening, everybody. And especially thanks to Abu Dhabi chapter that they give me the opportunity to present about that. The ESR, which is very hot topic today. Mr. Hanumanta, you have covered many things, which is really important, and I really appreciate for that. So if you allow me to share the screens, just
Yes, you can share the screen.
yeah, sure. Is it visible?
Yes, you can maximize it.
That's great. Okay. So ESR is like everybody is curious about the ESR implementation in the UAE, where I am covering the topic for the like how we do the taste with the CIGA for the relevant activity. So just background is here about the how that ESR come into the picture. It was started from the EU long back in 1997, and they create the code of conduct to curb harmful tax competitions in the region, different region. So OECD is the Organization for Economic Cooperation and Development, has been formed by the EU, and then the BEPS actions reports with 15 action points, which is there is a list of the 15 action points are available on the BEPS websites. Different points are there. So EU released first list of blacklisted country along with three listing criteria, which is mentioned in Annexer 2, that is naturalize the effect of hybrid mismatch arrangements. UAE was added to the EU blacklist of no tax jurisdiction country in 2070. And after that, UAE will be actively started looking for this regulations and adopt in the UAE basically. So in January 2018, UAE was moved to grey list based on commitment towards the tax reform to OECD. Then May 2018, UAE joined OECD BEPS inclusive framework. So committed to implement minimum actions of 5, 6, 13, and 14. So 5 is a counter harmful tax practice. 6 is a preventive treaty abuse. 13 is the re-examine transfer pricing documentation, and 14 is a making dispute resolutions more effective. So later on, like there will be the further that all the transfer pricing and will come once this ESR will be uh, exist in the UAE. So that will be the future in the UAE. So UAE will be subject to peer review focusing on monitoring the implementation of the BEPS action plan basically. That is in May 2018. Now January 2019, UAE missed to deadline of December 18 for applying BPS minimum actions. And again, UAE has been added into the blacklist. So in April, UAE implemented ESR with the point number action 5 of the OECD guideline. And then UAE refrained multilateral convention to implement tax treaty related measure to prevent tax treaty BEPS Action 6 and implementation of Action 6. And ultimately in 2019 October, UAE was removed from EU blacklist. So this is the history of the how that ESR comes here, and there are a lot of many more is also supposed to be there in near future. So economic substance regulatory that Hanumanta has covered, and everybody knows that it's for the profits booking into the low tax jurisdictions for the different activity. So that's the purpose to bring this ESR in this region. So this is the overall concept, substance over the forms, adequate and approach. CIGA means core income generating activity. Economic substance test need to be do BEPS, self-assessment and self-reporting. That is very important for each and every organizations. Passive activities, like if you have something else in trade license and you are doing some other business or other activity other than trade license. So all will need to be taken care. Connected person, outsourcing activities. So these are the things. Now reporting authority. Recently that MOF has done tab with the FTA for the regulations and to monitoring this ESR activity. So main is a Ministry of Finance, then FTA is a National Assessing Authority. Other regulator or regulatory authorities are the central banks, insurance authorities, SCA, that is Investment Fund Management, Ministry of Economy, Financial Free Zone, and other free zones. So these are the free zone which this ESR will be applicable to almost all free zone. Nobody is left in that case. So these are the list of the free zones. I'm going bit fast because later on there is something is precisely we have to go. Roles and responsibility of the authority is here, like say regulatory authority. They collect the ES notification which we have submitted in the month of June. 30th June was the deadline, and report from the licenses. So collection of other documents, information we have already submitted to the authorities. Now National Assessing Authority assessment to determine if license or exempt license made the ES test. So that what we are going to submit the report before 31st December. It is going to be National Assessing Authority, that is a FTA. And then the competent authority exchange the information with the foreign component. That is the government job, what they are taking in future. Once you submit the report, they will conduct this activity, means foreign competent, they will cross verify everything. So these are the, from here you can check your risk of for your company by not filing the ESR reporting. This you have to keep it in mind. So there are different articles are there. ESR law 1 to 22, that test applicability, assess relevant activity, file notification. This we reach up to this third items. Now another three, that identify core income generating activity in your organization, then perform the ES test and submit reports. So these three we have to conduct now as early as possible and submit before 31st December. So rest will be done by the National Assessing Authority, exchange the information with the different foreign competent authorities. Offense and penalties are there in failure of any wrong declarations or anything. And then if you want, you can appeal and proceeding in NA against the administrative. So that might be ultimate things. Exactly. Now we Article 8, content of ESR reports basically. The license should provide the UAE regulatory authority the relevant substance information annually within time, which Hanumanta has covered that. All these things, like I'm going a bit fast. Nature of relevant activity, income generated through relevant activity, substance, financial statement, business location, physical assets, use, conduct, relevant activity should be declared. Licenses in IP, business needs declarations, high risk, IP, and other things. So CIGA, that are all central importance or to the license for the generate the gross income from the relevant activity. Operational expenses, assets related relevant activities should be declared. Self declaration by license whether they satisfy the economic substance test. Detailed information of employee, because this is very important. Right now, nobody is bothered about the employee and their qualifications, particular in this region. So they have to be proper employment, and it should be with the qualifications they have to declare. And another thing is main important is outsource. Many companies are outsource their activity for the different areas. Subcontracting are there. So you should have adequate control and supervision for the outsourcing. So overall economic, there are three phases are there, that core income generating activity managed and directed in UAE and adequacy. So particular for the adequate level expenditure, OPEX, operational expenditure, premises in UAE is required. Then can be outsourced to third party, must be conducted in UAE, ability to monitor and control should with the entity if it is a third party. Some client may have their own outsourcing unit outside UAE. That also they have to declare and manage the records for that. Now CIGA test, core income generate activity test. That is by default, it everyone has to do that. Then they understand whether they are falling under the relevant activity or not. CIGA must be activities of central importance to generate relevant incomes. So CIGA must be performed in UAE. So your core income generate should be performed in UAE and it should be generated in the UAE. Activities that are not CIGA can undertaken outside UAE. It can be outsourced and CIGA vary depending on relevant activity. However, guidance and examples are provided in Annex 8 and 13 in the law, but are not exhaustive list of all CIGA's activities. Sorry. So suggested CIGA's like shipping business, what should be these are the samples examples. Managing crews include ironing, paying, overseeing crews, overhauling and maintaining ship outside UAE. Maybe it should cover overseas and tracking shippings, determining what goods to order and when to deliver them, organizing and overseeing voyages. Holding company activity related to holding company business, which has been all these steps has been covered by the Hanumanta. So this high risk IP, that is all branding, franchisee, research, development, ancillary trading activity through which the intellectual property assets are exploited, leading the generation of revenue from third party. Insurance, predicting the calculating risk, insurance, reinsuring against the risk and providence, underwriting insurance and reinsurance. Similar way, investment fund management, UAE entity provide discretionary investment management service to investment fund located in the UAE in a different jurisdictions. So that SPV, he has Hanumanta has explained about that. Similar way, distributions, lease finance, banking business, and headquarter business. Now that organizations management activities test, this is very important, and we have seen many of the clients are not maintaining the minutes of meetings of the directors, even it not happening over here. I don't know, in COVID it is a remote meeting is going on, so possibly it will be allowed by the government, that we do not know currently. So meeting at adequate frequency, quorum of director, physical presence in UAE, meeting to be recorded in written minutes and signed by the directors. Minutes of such board meeting should record the making of strategic decisions. Director have necessary knowledge and expertise, and minutes to be kept in UAE. So maybe company secretary they required, or they can outsource some company secretary work to their consultant for that to manage this. So then the adequacy test, that is very important for that. So qualified employee, your expenditure in UAE, and your physical assets in UAE. So all these records need to be maintained precisely, and while the preparing the reports, you need to be declare all these things and proper with the value and everything. Now about the outsourcing, that so license can outsource by the clause 2 article 6 subject to following condition, which is mentioned in the MOF websites. The license can demonstrate adequate supervision of outsource activity, means they have to maintain all outsource activities records and everything. The activities are conducted in UAE. That yes, they are expecting that this outsource activity should be conducted in UAE. The service provider must have adequate employee OPEC, operational expenditure, premises all the time. So means outsource who is your from where you are outsourcing, that also you might have to declare. So key aspect of the forthcoming compliance is separate books of accounts, proper documentation of board of director meetings, personal and official data proceed, outsourcing agreement with set defined responsibility, policy procedure of the organizations, agreement financial records supporting the assets, corporate governance, operational control and risk management, and tax law. So focus will be more on this are required to conduct the ESR, ES test basically. Maybe if you do it your in-house or if you are hiring somebody, all things should be at proper places. So in order to meet ESTs, the suggested methodology for implementation in your organization is as follow. So identify the core income generated activity for each relevant activity because one organization may have a multiple task or multiple activity, maybe distribution, maybe manufacture, like say petrochemical distributor, they have a manufacturing unit as well as they are doing trading in the material also. So it should be identified separately and prepare it accordingly. So determine economic substance test applicable for each relevant activity. Perform gap analysis in order to assess whether the business meet the compliance test or not. Identify required action to bridge the gaps in the relevant activity and implement the actions. So this is the methodology which need to be accepted and people has to this to follow that. This perform economic substance test and gather proof evidence in relation to the 2019 and 2020. Take corrective action to ensure economic substance test in UAE 2020. Maybe this year will be the learning phase, but you have to be very precise with the records in that case. Submit economics report as per the due date, which is 31st December 2020. So framework, what we suggest first, identify, analyze, process, implement, and conclusion. The applicability you identify, then current state of affair, relevant activity, economic substance, series of steps required to be undertaken to demonstrate economic. This could be in-house, this could be from the external consultant. Assess in implementing the action as decided. Assess in filing ESR notifications, ESR report to the relevant authority. So these are the applicable penalty which has been covered by the Hanumanta. Now this flow chart which has been covered by Hanumanta also, because few things are common in that, it is well explained. Here this time I am appreciating the government and particularly MOF, because the such a way they have given explanation for ESR with example is extraordinary. I request everybody to go through that. That will help you a lot in to implement this substance test in your organizations. So this is about this is the main part now is coming, that is the these are the action plan has been prepared by the BEPS in the coming future. So currently, as I mentioned, that 5, 6, 13, and 14 are covered into the existing ESR tests. So I will share this with the ICI chapter, all these informations. So you can later on do that. Even in OECD website, they have mentioned very much clearly for each action plan. So the law shall enable and ensure absolute transparency along with promoting increased certainty and predictability, which is action plan which I have above mentioned in the list. Same way, tax law, domestic tax law are coherent as tax deductible of person consists income of the recipient. However, international coherence in corporate income tax is lacking here. Action plan with the new set of standard designed to avoid double non-taxation. Here also you have to later on consider the DTT, double tax treaty with the different country will be there. Possibly we have to check that. Substance warrants reporting to full disclosure of the effects and benefit of the international standards. Now, substance over the forms, like say, see to have a this taste ESR taste in house. So, substance over form, what it means that so substance over form is an accounting principle which recognizes that business transaction should be accounted in accordance with their economic substance instead of their legal form. See, see here the thing is that as I mentioned earlier, that in the trade license we have a certain activity, but what in practical we are doing many other activity which is other than trade license also. So here that we have to check that business transaction apart from its legal or tax consideration, legal form refers to the interpretation of business transaction in accordance with the trade license. That should be match. UAE business are expected to use a substance over form approach to determine whether they undertake relevant activity. And as a result, it are within the scope of the regulations. This determination would require the UAE business to not only consider the activities stated under their commercial license or registration certificate, but also assess the activity carried out during the financial period. Somewhere you have given the loan to some company, invest in company which may not be in your trade license. So these are the relevant activity we have to review that. Thus, it is important to access actual activity of the license. For example, entity has trading activity mentioned in trade license issued by relevant authority. But if the entity has given loan to consideration to any other entity in UAE or outside UAE, he will be classified as doing lease finance business even though he is trading activity as per document. So, second thing, adequate and appropriates. So, adequate and appropriate depends on the nature of the business, its size, relevant activity carried, regulatory environment, etc. So, licensee has to maintain and manage record as a proof of adequacy and appropriateness of the resource utilized and expenditure incurred. So, resource are the employees, any outsourcing company, and their expenditure, whatever incurred during the financial year. The requirement of the adequate employees is aimed to ensure employees carrying out relevant activity are suitable, qualified to carry out such work. So if you have an engineer in your company and if he is taking care of something accounting, make sure about that, don't declare that. The requirement of adequate premises in intent to ensure that licenses procure appropriate premises to carry out such relevant activity. Premises can include office space, warehouse, factory, etc. Depending on the nature of the activity conducted, it can be owned or leased provided documents are available to prove it. So your activity should be based and physically it should be visible. So at the other part is that the meeting the adequacy test would be challenged and may not be adequate. Amongst others, below are the indicative areas that the company may use demonstrate economic substance in the UAE, like historical trend around revenue, number of employee assets, operating expense, documents, information submitted to the regulatory authority, company gross profit margin relating to industry trend, in normal circumstances. Comparison of similar business operations outside the UAE dealing are at arm's length, which demonstrate allocation of risk proportionate to the control. Here, the arm's length pricing, if we, when the maybe next session on the transfer pricing, that everybody knows that arm's length pricing are always considered in that transfer pricing. So if you go through the FAQ of MOF website, I have just adequate, and that is the definition that UAE acknowledge the business vary in size and nature, and what is adequate and appropriate will depend on the nature and level of activity carried out and the level of income earned by the licenses. So your activity belongs to your income, that relatedness should be there. The regulations and guidance, therefore, do not provide a minimum standard for what is considered adequate or appropriate. The FTA is expected to take pragmatic approach when assessing whether a license has met the economic substance state. Recognize that the type and level of activity of licenses may fluctuate during a financial period and from year to year. This is clearly government also know, Ministry of Finance also know that this kind of means activity means adequate and appropriate activity may not fall as per the trade license, in particular this region. Now, how we economic substance state applicable if we are poor income generated activity, how relevant activity are performed if it is applicable. So direct and manage in the UAE, at least one for a board meeting per year should be required. Minutes signed and kept in UAE. Director in UAE have necessary knowledge, expertise, and key decision taken in UAE. I don't know in the this virtual world right now we are there, how it is going to be managed within the UAE. Possibly there you have to prove some recording or this kind of minutes of meetings, online minutes of meeting you might have to record and kept with you to provide as and when required by the government. So list include the CI, core income generated activity are conducted in UAE also, means your income should be generated in the UAE with your registered and listed activity. Employee should have a based in UAE also. Your expenses should be occurred and in the UAE. You should have physical assets, and if it is outsourced, you should have a control and monitoring of outsourcing. Now, connected person. This definition is very important because there is a here the multiple, and people have a like say factory in Africa, other jurisdiction of this world, KSA, they may have a factory in UAE also, India also. So connected person are, we need to define as a group how it is represent into the trade license in the organizations. He may have a three companies in UAE or different activity in different three company. I have a client who has a manufacturing unit in one company, in other company there is a trading business. It is very normal here in the UAE. The amended ES regulation define connected person as an entity that is a part of the same group as the licensee or the exempted license. This is the definition as law is saying. So a group is defined as two or more entity related through ownership or control such that they are required to prepare consolidated financial statement for financial reporting process under the accounting standard applicable there too. So IFRS 10, as Hanumanta has mentioned that this need to be reported under the IFRS 10, and that might help for the group reporting. So to meet objective and the standard required an entity that control one or more than more other entity, subsidiary, it might be a subsidiary or may not be that. So present consolidated financial statement define the principle of control and establish control as the basis for the consolidations, set out how to apply the principle of control, identify whether an investor control an investee and therefore must consolidate the investee also. So set out accounting requirement for the preparation of consolidated financial statement and define an investment entity and set out the exceptions to consolidated subsidiary of an investment entity. So there might be a multiple investment in one company, so that wing should be appear here. Maybe some are the only investor and some are the maybe the director and fully involved in the business also. Now outsourcing, who can you outsource third party service provider and related companies? What can be outsourced? A license can outsource any of all core income generators so long as the outsourced activity are performed in the UAE. A license can outsource any or all non-core income generated activity outside UAE like IT and HR activity. They can outsource from outside of UAE also. So license must demonstrate when outsourcing activity is there that supervision of the outsourced activity should be there into the organization. The outsourced activity must be conducted in the UAE. The outsourcing provider has adequate substance in the UAE also. Investment fund management, I think it has been covered by the Hanumanta, and we are running short of the time, so it is already there. License, lease financing business also has been covered by Hanumanta. You can go later on. You can go through the slides and other things. This is the headquarter business definitions. I'm taking in IP business, research development, holding companies, this distributions and service center. This is the major business has been covered under the distribution and service center. So I'm just repeating, might be some points may be new. So the license is considered engaged as a distribution business. It is covered that any distributions as a warehouse, import, export, third part export, everything will be covered under this. They purchase raw material and finished product from foreign group of company and distribute those raw material or finished goods. A license is considered engaged as a service center business if provide consulting, administrative, other service to a foreign group companies. Here you can consider the engineers like architectures, interior designers in that area, in like a professional service provider, and lot of advisory companies are there. Those who are providing service outside UAE, they are covered under this. So transporting the stock and storing component parts, this is normal distribution material goods ready for sales. Core income generating activity refers to the movement of storage of raw material and finished product and managing the risk associated with this. Managing inventory, taking orders, providing consulting or other administrative service. So these are the activities which we have covered in that and how you have to proceed with that. I hope, I think, yeah, Shafiq, answer. You can take it on.
Yeah, sure. Thank you so much. Yeah. So if you can stop sharing your screen. Good evening, everyone. Mohammed Shafiq here with you. I'll be moderating the panel discussions now. It is indeed my honor and pleasure to host the moderate the session because I have two expert panel with me. Without further ado, I will just get into the panel discussion because I'm really conscious of the time. But all the attendees, please do shoot your questions in the Q&A sessions. At the end of the panel discussion, I'll be taking the questions from you. So my first question is a very broad question. This is to both of my panelists, because I think this will be a key takeaway of the whole session today. Back in 2018, January 1st, I received a call from my client early morning. And he asked me, Shafiq, my customers are making a lot of issues here because I'm charging VAT. What shall I do? I said, I just read the newspaper now, and there's no news on the withdrawal of VAT, so you better charge that. People are just very new about the tax in this region. We were not discussing about VAT in this part of the world, or the tax in this part of the world earlier, maybe 5 years back. But within 5 years now, you see, you have VAT, you have excise tax, country by country reporting, ESR, all that's taking place. A very interesting point now to make is that we all had an impression that introducing a regulation and amending a regulation, it's a tedious process, will take a lot of time. But a year after its introduction, economic substance regulations are now being amended. And it's been understood that this amendment is after review and feedback from OECD and European Union bodies. So my question to the panelists now is, what is the strategical changes taking place in this region? How is this region changing from a macro perspective? Or if I wanted to put in a better manner, how should we look at the region now? Because it's not same as what we have seen 5 years back, and the change is massive. So first, let me ask this question to my CA Hanumanta. So please.
Thanks, Shafiq. It's a very generic question. So, see, any change for that matter is always difficult to accept. Okay, whether it is in our own personal lives, or whether it is especially when you enjoyed ease of doing business, no taxation, everything. So it's everybody is happy. Now the minute you charge something, then initially a lot of people will say that, oh, now uh, this will have a big impact, everybody will go off from here. But it really doesn't happen like that, actually. Okay, so initial reaction is like that. If you still look at it, the UAE, the VAT rate is only 5%, which is one of the least in the world, actually. Second thing is uh, any regulations that are coming. Okay, it is good in a way, because a lot of good governance will come. See, when I know, even forget even audit, even accounts maintaining is not mandatory. From a stage you are going into VAT, excise, CBCR, ESR. So the thing is, a lot of governance will automatically will come into place. Okay, so which is a welcome move. If you are looking at doing a big business, attracting a lot of foreign investments, your jurisdiction has to be first. Governance framework has to be good. Today, the world is one. They're no longer that you are this country, that country. So today you are doing a global business, okay, where the governance framework is very important for anyone to invest here, to understand the numbers, to believe in the numbers, to see everything. So even today, if you see globally, opening a bank account is difficult across the globe. Okay, why only UAE or anywhere across the globe? I mean, going forward, there is no, tax havens or anything. Even its offshores and everything will disappear over a period of time. Everything will come to one kind of a platform. So, uh, if you see last 4 years, couple of amendments have come. Okay, then going forward, probably transfer pricing might come, corporate taxes could come. But if you look at in the long run, all this will only attract bigger investment in the long run. Short run, yes, you may have a certain kind of misapprehensions, or people may say that it is becoming expensive, this, that. But again, all the tax revenues are put back to the public actually. So this will anyway, in turn, will help the overall economy actually. And having a good governance is always good. So that when you do any acquisitions or anything, you believe in the numbers. Today, earlier, banks used to struggle, to believe on the turnover. Today, at least, your VAT returns turnover is taken into, the reality. Is correct? Okay. So at least you try to tally and see. Bankers are so comfortable in lending now. At least the numbers are more and more this thing. Today, the another thing is FTA is becoming for ESR also the regulatory authority. One side you are doing VAT also. So all those who will be filing reports, you are also filing financial information also. Okay. Today, FTA is only taking for VAT only limited information. So there could be many implications will be there. So more and more your governance, your recording, your discipline has to improve, so that this will help the economy on a longer run.
Thank you so much. It's a very valid point that increased governance will bring more business and attract investments. Mr. Benitza, your thoughts on this, please. You are on mute.
See, basically, that this is regulatory is required in every country. Like say, we have seen that earlier people are not managing their books and accounts. So because of VAT now, it's compulsion for everybody to manage their books. They know, they realize themselves that where they are and what they are earning and where they are losing. So now these are the mindset is started to change for towards the, it's not towards the tax we can say, but towards the managing themselves for their organizations. So now it's a smallest people like grocery store. They also have started to manage their books and other things. So this, it is good that slowly, gradually they are bringing step by step all the regulations in UAE, and always since long we are enjoying lot of facility from the government free of cost without paying any tax. So now it's right time that to pay back instead of like say to the government.
Perfect. Thank you. My next question is to Sia Hanumanta. There has been a significant change in the definition of licensees. As per the new definition, the natural person has been removed and included only the juridical person or an unincorporated partnership that carries their honor element activity. So, as per the FAQ, a natural person, sole proprietorship, trust, and a foundation are not considered as a licensee. How do we take this in consensus? There is a discussion going on which says that this is not covered in the law, but it's only in the FAQ. So how do we take this?
I think we'll have to take into account, in India at least, we come with some kind of a notification or amendments or in terms of, clarifications along with the law. Here, I think we'll have to see the FAQ is coming from Minister of Finance website actually. So you have to take it's. I would look at it more like a clarification. Okay, they said that sole establishments, individuals, and trusts and foundations, probably they intend to exclude them from the the purview of ESR actually.
Great, yeah. Recently, the Ministry of Finance have also posted this in their social media pages that the sole establishment will not be considered. Thank you. Next question is to Mr. Vinitsa. As you were also touching about the connected person definition. The amended economic substance regulation introduced the exemption that a licensee, that is a branch of a foreign entity, the relevant income is subject to tax in a jurisdiction other than the state. The guidance clarifies that subject to tax means the income of the UAE branch must be reported in the tax return of the foreign parent, regardless of exemption. So for me, this is a blanket statement. Could you please elaborate on what exactly subject to tax means?
See, basically, any income generated from the relevant activity which is reported in foreign parent jurisdiction, they don't have to file the ESR reporting over here. So if it is a foreign connected person that we need to establish and we need to check that whether they are taxpayer in other jurisdiction, foreign their home countries, or even their organization is also paying like wealth tax and other taxations in their home country. So that's the individual person has to check in that case.
Okay, thank you for that insight.
Just to
Uh,
add here,
yes,
one more point you have to be kept in mind. Suppose an entity is, suppose in India is a parent company and UAE is a branch, and you are consolidating in India for the purpose of computation of tax. Okay. Whereas there are certain tax incentives or double taxation treaties applicable, whereby you are not paying tax. Assume that it's a zero tax. Even then, these are exempted only because that is only a benefit given. That benefit, for subsequent years may be withdrawn or it may be a time bound one. So as of today, are you clubbing it for the tax purpose? Afterwards, whether they're charging the tax or not, it's not really relevant.
very clear point. Thank you, sir. Next question is to see Anamada sir, but just the big change I see is that FTA is coming into the picture, right? FTA has become the National Assessing Authority to oversee the compliance and control with the new ASR. The regulatory authorities will remain involved, providing support to the FTA, as you have explained. But in essence, if you look at the substance as a concept, tax authorities is the right administrator. I do believe that. Um, but one interesting addition is that in the new ESR regulation, it is also mandated to submit a financial report as part of your ESR reporting, right? So how do you see this? What are the significant implications of this? And how do you judge the chances of enhanced scrutiny?
So I will divide your question into two parts. One is FTA becoming the National Assessing Authority. In
Yeah.
fact, it's a very good move because globally, if you see, okay, regulators will not, get into any commercial activity. Okay, today if you look at all the regulatory authorities, they are also issuing licenses. They are, selling spaces. So there is a commercial activities happening. Okay, and a regulation, maybe a separate department will be there, but if it is under FTA, where there is an independent authority which only does assessments actually. Okay, they are not into any commercial activity. That is a good move actually. Okay, second one, financial statements, even in my view, even in the VAT also, sooner or later they should ask this one, because at the end, today you're only reporting taxable supplies, correct, and zero rated supplies, exempted supplies. You're not reporting other than those appearing in your revenue, for example out of scope supplies and all these things. So somewhere all this informational will be used for analytics, and they will try to uh, because since they'll be assessing, they'll also have to look at your revenues and expenses and everything. Otherwise, a report will only consist of limited information. And audit, I mean, financial statements will have much more detailed information. And they can always call for, subsequently ledgers or, any this thing to check the adequacy or to see whether operating expenses are good enough or assets are good enough. So for that, financial statements. In fact, sooner or later, financial statements may amend it to audited also, because otherwise, everybody will furnish in their own formats actually. Again, that will become very difficult challenge for the regulator to look into also. At least they will give some kind of a format, or as per IFRS standards or something if they prepare. For the regulatory also, it's easy to analyze the reports because everyone will be in a standard way.
Thank you. Next question. is to Mr. Vinit. Uh, Two interesting definition changes. Earlier, the question was how do you define group when there was no official definition provided? No definitions. Now there are two definitions: connected person and group is defined in the economic substance regulation. But if you look at the group definition, this has distinctively defined as two or more entities related through ownership or control such that they are required to prepare a consolidated financial statement. This, in a way, as per Mr. Hanumanta's presentation and your presentation, definitely that's based on IFRS. My question is, what happens to the group which do not consolidate their financial statement? Do you think it's still fall in or out of scope?
See, basically, as per the guideline of the MOF, they have to, if it is a related party, even like family members, they have to do the consolidations, and then they have to reporting accordingly. And again, individual substance test also required for independent company, and then they have to conclude the things that how to proceed further.
Okay. Hanuman sir, do you have anything to add or
No,
just
as I mentioned in my presentation,
yeah?
you are required to consolidate as per the applicable standards. Okay, if you are not doing also, you are ought to be required to do it. So not doing is only your choice actually. Okay, but if the accounting standard requires to be consolidated, then you will fall under the definition of connected person. Just because you are not doing, you cannot escape from the connected person definition.
Thank you. Thank you for that interesting point. Now, we all know that in June, as we approach the due date for filing the notification, the most number of questions raised was regarding the high sea sales and where goods are sold internationally. Now that new regulation has made it clear that it is purchase of raw materials or the finished products from a foreign group company and distribution, it would take to the distribution business category. It's clear now. It's clear that drop shipment models, local sales are now within the purview of the definition. Uh, do you think that the scope of confusion is totally removed? What is the practical impact of this amendment, especially when you say that 80% of UAE businesses it's in distribution and service center activity?
Question to me or Beneath?
Yeah, it's to Hanuman sir. Yeah.
Okay. See, with the new regulations, as I mentioned, I think 95, 90, almost 99% of the ambiguities or confusions or which led to interpretations that got resolved actually. If you look at 80%, yes, they will fall under the distribution service center business. But now even in that 80%, maybe 80% will not be required, will not come under the definition, because only when you are falling under the connected person definition, where you are required to do the consolidation. Just because you are buying from a related party by holding 3% share, 5% share, you are not you will not be considered as getting into the activity of relevant activity of distribution service center business. Only thing, if you are buying from your subsidiary or you are buying from an entity which you are controlling, that is the only place where you are in a position to dictate the price or shift profits from one jurisdiction to other jurisdiction. Otherwise, so earlier the definition was, they didn't mention about connected person definition. Even if I have 1% share in other company, okay, or even 0.1%, I will be falling under the distribution service center business. Now, out of that 80%, also 80% will go away in this definition. Only limited people will be there.
So I'll just close my questions and we'll take the attendees' question.
Yeah, sure.
The first question is by Mr. Prakash Mehta. Please confirm that no declaration to be filed by entities who are not engaged in any relevant activities.
Not required to file notification unless that particular relevant regulatory authorities. For example, if it is Jabalali free zone, if they insist saying that everyone has to file, or you need to demonstrate that you are not required to, then you will have to file notification. Otherwise, not required.
Um, okay, shall I move to next question? If a UAE company formed purely for investment within and outside UAE, only for trading purpose and earn dividend, interest, will this fall under non-exempt company? Question by Kiran Lala. Mr. Vinit.
Yeah.
Yeah, thank you.
Sure. So if investment purpose, but that they have to, they fall under the ESR because that their dividend income, interest comes are considered under the ESR basically. They have to declare that, if I am not wrong.
Okay.
Just to add, it's an investment. Does it mean it's a holding company or purely investing into stocks and shares like that? Actually, if it is like that, suppose assume that you are investing into equities or then it will not be a relevant activity at all. Actually, okay.
Yeah.
Similarly, if you are investing into debt instruments which are traded, then also it is not actually. Only if it is not listed once, then you'll have to look into that.
Maybe it's from investment management perspective. I'm not sure how, what
No,
perspective it was.
investment management business is only where you are, discretionary you are maintaining. So I don't think so.
Yeah,
He is referring to normally investing into share markets. I think so. Correct?
Right. And possibly in property also, that might be there.
the next question is from Nisar Shah. If a UAE resident in his individual capacity as a shareholder, both in UAE and Oman entities, is this foreign connected person? So
I
this
think now the
is,
definition has clarified very clearly. You will have to see whether you fall under that connected person, common ownership, whereby you are required to common ownership or control where you are required to consolidate. If you are not, then it will not come.
next question is from Uday. What if holding company staff provides management services to subsidiaries and to the related companies and charge them for the same? What are the implications?
This will not fall under holding company. I think this will fall under the headquarter business. So that their staff, they are be charging, and they raise the invoice to their parent company. So it could be in the headquarter business.
Yeah.
Mostly they come under service center business.
Yeah,
Okay,
it
if
can.
it falls under that definition of foreign
Service.
connected person,
Yeah.
definitely as Binit said, they lose the status of holding the minute they carry on any other activity.
Yeah. Yeah, a very valid question. Just to, this has been already clarified, but still, for the notification already filed for financial year entered in December 2019, what is the timeline for refiling? Yeah, as
They
of
said
now.
they will announce it. Okay, once they announce, I think November first week is what I heard through sources that they will be ready with the portal, and I think that time they will also give some time for everyone to refile it.
Okay.
But when at the time of refiling, okay, ignore what has been filed. You will have to assess based on the new regulations and see whether you are required to file. If by suppose in the earlier regulations you have filed already, and with the new regulations you are not required to file, or you are required to file with some supporting documents which you have to do as per that.
Yeah, that's an important point to note. Now, another question is from Mohammed Hanif Saib. There is a notification on ESR due to COVID-19. Yeah, COVID-19 industry advisory notification. Consideration will be given to the impact of restriction on the ability of licensee to meet the requirements of the directed and managed trust. Business should give consideration to the ability to appoint alternate directors in the UAE who can attend meetings in the UAE and thereby address any short-term practical difficulties arising from COVID-19 related measures. This is just okay. He shared as an additional information and not a question, but this has been already addressed by Mr. Vinith as well. We are in a virtual world, and Minister of Finance have taken appropriately guided us on in terms of COVID-19. So that's it. No further questions from the attendees. Just to sum it up, I think just to sum up the key takeaways from the presentation from our veteran speakers and also the panel discussions. I would say UAE business are advised to perform an assessment as to whether the current position is still valid, taking into account the changes implemented. In particular, as Salman said, distribution and service center business need to consider the impact of the amended definition of the distribution and service center business to ensure that the position is correct. Government-owned entities that avail the government exemption from the ESR previously will now be subject to the new ESR unless any cases of exemption applies. Branches may be exempt from the applicability of the new ESR. However, it should be confirmed if the applicable documentation from the foreign parent company or head office can be provided to the regulatory authorities. And finally, all businesses falling under the definition of a licensee, as per the new economic substance regulation, will be required to resubmit the notification in the MOF portal that will be released soon. As per Hanumantha says, hopefully it will be soon, like by November or so. That's it. Anything to add, speakers? Yeah, our chairman wants to add something, please.
I have one question. Under the financing lease condition, if a company gives a car loan, vehicle loan on a nominal interest, how will that be seen under ESR? So there is a consideration, there is a loan to the employee. So how is that seen? Yeah.
So it will come under the finance lease relevant activity. Actually.
Then does
any
the
consideration
has
that
to
you
take,
receive, yeah.
Come back, sorry.
Any consideration that you receive, then that will fall under that particular.
So
definition.
then one has to take some license under central bank, or how will that
is
happen?
what in my presentation I mentioned. They are going to come out with a guideline for that actually, how it will be governed, regulated. Yeah.
Okay, thank you so much.
Thank you. That's a wrap. Now, may I welcome CA Rajesh Reddy, committee member, to propose a formal vote of thanks.
Thank you, CA Shafiq. Ladies and gentlemen, a very good evening to you all. It was an amazing session on key changes in economic substance regulations and their implications. It gives me immense pleasure to deliver a vote of thanks for the event on behalf of the Managing Committee of ICAI Abu Dhabi chapter. I would like to thank our speakers for the evening, CA Hanumant Kumar, Mr. Binit Shah, and our committee member, CA Mohammad Shafiq, for sparing their time and delivering a very informative and engaging session. It's been under a year after the UAE was removed from EU blacklist, but the pace at which UAE government is rolling out the implementation of ESR regulations is phenomenal. It's great to see a lot of concepts and issues are either simplified or clarified in the second version of ESR regulations, say like defining connected person, or removal of concept of deemed resident, simplification of several related activities, relevant activities, economic substance test was simplified, even compliance requirements was simplified a lot, etc. to mention a few. I hope members took a note of deadlines to file notification and returns and all related compliance requirements. I'm sure this session has facilitated members in new learning and relearning several issues on ESR. Moving forward, I would like to extend a special thanks to our sponsors for their continued support to our chapter and its activities. Our audience, our members, has been exceptional today. No event can be successful without a fully engaged audience. A big thanks goes to all our members who attended this event today. Lastly, I would like to congratulate and thank our PDC team for all their efforts in arranging another great event today evening. I hope to see you all in the next event. Until then, stay healthy, stay safe. Good night.
Good night.
Right. Good night.
Thank you, C. Hanuman and Mr. Beneath. Thank you so much for your wonderful
Thank you
session.
very much.
It was
Thank
very
you.
nice, and I think a lot of members have definitely taken a lot of takeaways from this session. So we are really thankful to you all of you. Thank you, members. Good night, everyone.
Thank you.
Right.